Hi and welcome to this video. My name is Julian Komar from Market Update Premium. We trade growth and momentum stocks. Today I want to talk about the power of a strong trading routine. I know that a lot of traders have problems to create an ideal trading routine for themselves and also to stick with this routine. And today I want to go with you to a potential weekend routine and also a daily routine that you can adopt for yourself and fit it to your own circumstances. So very important, and this is also one thing I always tell my members and also my one-on-one mentoring students is a solid routine is the foundation of consistency. You need to follow a clear routine every day and also at the weekend to stay on top of the trading and also to stay on top of the market. And consistency leads to better trading results. Your goal as a trader must be to repeat the same trades over and over and over again. And if you follow a clear routine, you can make sure that you can repeat the trades. And on the other side, you gain some experience with a trading routine. And over time, it becomes much easier to follow the routine and you need also less time. Professional traders, in my experience, are masters of preparation. They win the game before the game. So that means they put a lot of attention and a lot of time into the preparation of their trading day, but also into the preparation of their watch lists, into the preparation of the mindset, and so on. So it's really, really important that you make or that you create a trading routine for your trading and for your daily life. Otherwise, when you switch your routine every day, you will always start at scratch and you cannot gain experience in how you organize your daily life in trading. So trading routine is very important. There is no one size fits all routine. So this is also something I see when I work with other traders together. Everybody has different circumstances. Everybody lives also in a different time zone, in a different country, etc. So you have to find a routine for your daily life and that fits into your daily life. And one of the secrets of sticking to a trading routine is to really fit that into your daily life and into your circumstances. If a trading routines feels awkward to you and if a trading routines does not fit into your life because of your family, of your friends, of your other activities, you will not follow that. And you have to find something which fits into the daily life so that you are also or that you can also have a family life, friends life, and also other activities around that. So we will come to that later, and I will show you how to optimize that for you. So really respect that. When it comes to trading routine, I very often hear from traders, yeah, I cannot trade or I cannot follow a trading routine because I have a day job or I'm traveling a lot in my day job, etc. From my own experience, I can say part-time trading is possible. I have been a part-time trader for almost 20 years. I was traveling a lot in between, and I know that this is possible. And it comes all down to the same thing I said a minute before. You have to find a routine that you can apply in different circumstances. When you are traveling and you're sitting in your hotel room in the evening or in the morning, spend 30 minutes with trading routine. Spend 30 minutes to prepare yourself for the next trading day. That's possible. You can also use Wi-Fi connections at airports, for example. You can work in a train, you can work in a bus, or you can also use time in between in the lunch breaks or in the evening to prepare your trading day. It's just a question of how important trading for you is, and if you give it a high priority, you can definitely have a good trading routine. Break your routine into two parts. This is what I'm doing. So I have a weekend routine where I'm doing roughly 90% of the work. I'm not doing a lot of trading work during the week. And this is the benefit of trading almost 20 years part-time, because I had to develop a lot of different processes and I have to adjust my routine so that it fits into my daily life. And I put 90% of the work at the weekend. And another benefit, if you do the most work at the weekend, it's outside of the market. So you are not impacted by the emotional up and downs that you maybe experience during the trading week. So spend the most time on the weekend. Then you need a daily routine, a very, very focused and narrow daily routine where you only do the most essential task. I'm not doing a lot of things on a daily basis. I will show you that in a couple of minutes. But limiting your time and limiting also the task on a daily life is very important. Then you also have time for your family, for your other activities, etc. And of course, experience in trading counts. If you have a couple of years of experience and you use the same routine over and over again, you get better and you get faster, and it feels more natural for you. And after a couple of years with the same trading routine, you need so little time in your daily life, and you don't have to watch the markets all the day. Mastering the weekend routine. Let's have a look at a potential weekend routine. So I personally made the experience that 2 to 3 hours of really focused work is enough, and you can spread it over multiple days. You can do 1 hour on Friday, maybe 1 hour on Saturday, maybe 1 hour on Sunday. You don't have to do that on directly in one block. You can also split that over a couple of days. Totally fine. So, but I think, 2 or 3 hours is definitely enough. And it's not that you have to, or it's not that every weekend you need 2 or 3 hours. Some weekends you need a little bit more time. Some weekends you need less time. And when you are in cash and the market is not in a very good shape, then you probably need just 30 minutes or 1 hour. Another good thing is to limit and also track the time. That's what I did at the beginning of my own trading career. I limited the time I want to spend every weekend with trading, and I tracked the time over time, so that I saw that I got better and faster in my trading routine. This is very helpful. Limitation also helps you to keep focus and being less distracted, so that you really have a list of your tasks. You go through the different tasks you want to do in the weekend routine and you track the time. Then, when it comes to the content of a weekend routine, stock selection should be the most or should be the task which get the most time of your trading routine at the weekend. So I'm going through all my screeners that are my weekend screeners, and I am focusing on identifying the high potential setups. So the best stocks I can find in my screeners with the best setups. You can find a lot of other videos here in my YouTube channel, and of course I'm teaching all the stuff very, very detailed in my video course. So, and after that you have a watch list of high potential setups. And of course you have to do some chart analysis, you have to look at fundamentals, and probably you also have to do some research about companies. But here, limitation and experience is the key too. You don't want to look at every stock. You want to look at the real high potential setups, the best one, and you want to gain experience over time so that you can skip very fast stocks that do not match the criteria. So I can easily review 300 to 500 stocks at the weekend just by going through the screeners, and I skip almost, I would say, 99% of all these stocks because I can see very quickly that they are not matching my criteria. But of course, I have a lot of experience in the stock market. So when it comes to watchlist management, limitation is the key too. I don't want to have 150 or 200 stocks on my watch list. That would distract me and that would not set a clear focus. Instead, I keep a maximum of 50 stocks on my watch list, and the less, the better. You want to be really focused. You want to trade only the best setups. And focus and limitation also helps you to reduce time. You don't have to watch so many stocks during the week or do so many analysis about stocks at the next weekend. Then out of these 50 stocks, you build a focus watch list for the next week with the 5 to 10 stocks that are likely to trigger a buy signal in the next week. So what does it mean? I only have stocks on my focus watch list which are very close to a buy trigger. I'm a breakout trader. I trade, I would say, 90% of all my stocks as breakouts. So that means when a stock is very close to what I call a breakout line and just 2 or 3% around this breakout line, this is the stock I will add to the watch list because it could trigger an entry next week. All the other stocks which are far away from a pivot point, from an entry point, a potential entry point, these are not stocks I keep on the focus watch list. And the focus watch list is the watch list to work with on the next week. I prepare all this stuff for my members, right? I have a watch list for them. I have a focus watch list every day. I give also potential entry signals in a daily preparation post. So I'm doing this preparation for myself and I share that also with my members. And you should do the same things, but for yourself. Then you set alerts at key price levels. This is a very, very helpful tool. So you don't have to watch all the stocks all the day. You set alerts, and as soon as the price crosses a certain price mark, then you get a notification on your mobile phone or via email or SMS, and then you can act. So for me, during the day, I have set alerts. And when I get a notification, it's just a question of opening my trading app, placing an order, and that's it. I'm not doing anything else during the week. I use my mobile phone just as an execution tool. So, and the foundation for that is having the focus watch list, having the alerts in place. This is important. Then you want to create a plan for the next week. You want to have a look at different market scenarios. What could happen in the next week? And how would you react to that? This is important to prepare yourself mentally for that, so that you are not that you not have to react spontaneously if the market is turning around or if the market is giving a buy or sell signal. So instead, you anticipate a scenario in your mind, you visualize that, or you can also use a chart and draw on the chart and create scenarios for the next week. You should do that also with your stocks that you are holding, so that you're mentally prepared for the next week and can react very quick to what is happening in real time. Define your responses to potential buy and sell signal for the market and for your stocks. I already talked about that a little bit. So what are you doing if a stock crosses your buy signal? Maybe you are working with stop orders and then you don't have to do anything. But if you work with market orders, then you have to very quickly open your trading app, or you have to watch the volume for a couple of minutes and then you place your order. And the same is true for sell signals. What are you doing if a stock crosses a certain moving average or falls back into the trading range? I have a lot of these sell signals and also buy signals prepared for my members, and I teach that in my video course. So, and the more you get familiar with that, the easier it is also to react to that. And the more you prepare yourself for the next trading week, the easier it is to react in real time to what is happening. And then you don't do any spontaneous trades anymore or any bad reactions. Then, of course, you should review your portfolio. So have a look at each position. Does it act strong or was it weak the week before? Should you sell or should you prepare yourself for adding to the position next week? So keep an eye on these stocks and also have a plan for every stock. This is something I teach to my members. And this is also something I observe, that so many people do not have a plan for every day and also do not have a plan for the week, what they should do with their stocks. And that's very important. How does the stock should react on a given day? That's very important, you know, to get a feeling for a stock if it's acting right or if it's acting weak. And when you look at your own portfolio and you see a lot of weakness in stocks, stocks are breaking down, falling back into their ranges, crossing moving averages, or falling back from the highs, etc. Then it's probably time to become a little bit more defensive in the next week and probably also take less trades. So this is why portfolio review is very important. Log your trades, update your spreadsheets at the weekend. And also keep an eye on your trading journal, right? Write down all the positions you closed, write down the positions you opened, maybe also add some comments to that, how you felt during the week and how you felt if a stock was up or down, so that you can also get more insights and collect more insights over time, how you are doing as a trader, and get insights into your personality. And then, spend the rest of the time with research. Research is something I spend the most time with, but of course, I have a little bit more experience when it comes to screening and when it comes to my routine. So I'm spending a lot of time studying companies and try to find out what makes their products so attractive and their services so attractive, so that they are able to attract a lot of money either on the stock market or on the real market when it comes to selling their products and their services. Because that helps a lot to also find high growth opportunities in the stock market. So stocks research is important, but I know that not so many people have time for that or make it not a priority. That's also why I share a lot of these insights in my community and also with my members in the videos and some articles. Then let's have a look at the daily routine and daily trading routine. So I would say I spent roughly 30 minutes on my daily trading routine. Very often less than 30 minutes. And I think it's a good time when you are a little bit more experienced as a trader and if you really, really keep yourself focused. Of course, you have to adapt that a little bit to your time zone and also to your schedule. So if you spend these 30 minutes in the morning, or if you spend that in the evening, or if you split that a little bit, for example, 15 minutes in the morning and 15 minutes in the evening, but limitation is absolutely the key to to keep also trading in your daily life and make it simple. So when should you do your daily trading routine? The best time is really when the markets are closed, so either before or after the trading session. And one thing is important: you want to prepare yourself. You don't want to watch the market the whole day and react spontaneously what is happening. No, you want to prepare yourself so that you are prepared to all the different scenarios that could come up in the daily trading routine. And that is, or the best time for that is when the markets are closed, when you don't have any impact from the ups and downs in the market and your positions, when you are in a calm state of mind and when you're not impacted by any emotions. That's very important. So, key task for a daily trading routine: review your focus watch list. This is the point of focus when it comes to buying. So, which stocks could trigger a buy signal on a given day? You want to update your alerts in that case, and you want to also create very quickly a scenario in your mind how you react if these alerts appear on your phone. What are you doing in that situation? You want to be very clear on that, because otherwise you will spend too much time when you get a buy alert and then you are probably too late or you are confused and you cannot act quickly enough. Adjust your alerts. I already said that. You want to be prepared and you don't want to miss a stock. That's important. That's where alerts help you. And the same is true if you probably want to sell a stock. You can also place an alert that you get notified before you get stopped out. Or on the other side, you want to be notified if a stock falls back into the range and you have to cut the position accordingly to the trading rules. Then you check your portfolio on a daily basis. Do any positions need adjustments? Do I have to take some profits? Do I have to sell a part of the position, or do I have to add to positions? Of course, that also should be in sync with your trading rules. Don't do any spontaneous things. The trading rules are there to keep you in the game and to make sure that you are successful. If you have no trading rules, develop some. Or on the other side, have a look into my video course. I'm teaching a lot of stuff when it comes to these trading rules. So check your portfolio, update the orders in your brokerage account. I saw so many traders who forgot orders in the brokerage software and then they were stopped into a trade on the short side or on the long side. So keep an eye on the orders in your brokerage account. Delete them. Place them new. That's important. Check the prices in the orders, especially with stop orders. Otherwise, you will have or you will make some mistakes. And update your stop loss orders. That's also important here, right? So you want to make sure that you get stopped out at the right price in the market if something happens and you need to sell a position. Log your trades in a spreadsheet or journal if that's needed. On on a lot of days, that's not needed because you're doing no trades, and then you don't have to write something down in the journal. Of course, it is always good if you write down some feelings, some emotions, so that you get more insights about yourself. So having a trading diary is very important. But if you don't have so much time for that, just add one column to your spreadsheets and write down how you felt on a given day. That is also sometimes enough. And then during market hours, stay very focused. If you have time to watch the market during the day, that's great. But if you are active in your day job, that's also not a big problem, right? So you want to keep an eye on the focus watch list. You want to check your alerts during the day. You want to check what the stocks are doing in your portfolio. And that's enough. And the rest you are doing after the market is closed or before the market opens on the next day. I only have one screener, one stock screener I'm watching during trading hours, and that is my new RS High screener. That is a screener that shows me all the stocks that are outstanding, or that shows an outstanding relative strength on a given day. So that means stocks that are really, really, really strong in comparison to the S&P 500. That's the only screener I'm looking at on a daily basis. And usually the screener shows 30 or 40 stocks, and I know most of the names. And this screener is only there to make sure that I do not miss a stock that its outstanding strength shows outstanding relative strength. For example, on a strong up gap, or after a very strong move after a company published earnings or something like that. And this is the only screener I'm looking at on a daily basis. So many people think that I'm spending a lot of time during the day by watching the markets and, going through my screeners and watch lists, etc., looking for stocks. No, I let the stocks come to me with my stock screeners at the weekend. I do a lot of preparation, and during the market hours, I focus on my trading, I focus on the stocks, and the only thing what I'm focused on is the new RS High Screener. And of course, I'm sharing also the settings in my video course and with my members. All right, I hope that this video helped you. So if you want to start your trading career, if you want to know more, of course, you can follow me here on YouTube. You can also follow me on Twitter or subscribe to my free newsletter every Sunday. And if you want to get more knowledge about growth stock trading, I can also recommend, of course, my Growth Traders Toolbox online course. It's a 5 stars course with a lot of happy video students. And on the other side, you can also join the Market Update Premium community 14 days for free. We are a community of very passionate growth stock traders, and you can have a free trial of 14 days.